Hello, guys. Welcome back to part 2 of our mutual fund basic series. In the last video, we understood what is mutual fund, how they work, how investors pool money, and fund managers invest it in companies. Today, we will go one step ahead and explore the types of mutual funds, the market cap classification, and why they matter. Something that every beginner must know before investing. Let's start with first and most important classification, asset class. I will simplify this into three major types. They are equity mutual funds, debt mutual funds, hybrid mutual funds. First, equity mutual funds. These are funds that invest mainly in stocks of companies. They are ideal for long term investors. People who want higher returns and can take a little risk can go with equity mutual fund. The value of your investment depends on how the stock market performs and how long you hold. One example for equity mutual fund is Parag Parikh Flexi Cap Fund. It invests across large, mid, and small cap companies and even in global stocks also. It is one of India's most trusted equity funds. Next, debt mutual funds. These invest in government bonds, treasury bills, and corporate debt. Basically, they lend your money to earn interest. They offer low or no risk and moderate returns compared to equity funds. It is perfect for short term investors. One example for debt mutual fund is HDFC Short Term Debt Fund, focuses on government and corporate bonds to deliver steady returns. And last, we have hybrid mutual funds. Hybrid funds mixes both equity plus debt. Hybrid mutual funds exist because they balance risk and returns. It is suitable for those who want growth but with some safety. Hybrid funds automatically shift between equity and debt funds based on market conditions, and this shift is done by fund manager. That's why they are also called balanced funds. One example for hybrid mutual fund is ICICI Prudential Balanced Advantage Fund. So that's the three major types based on where your money is invested. Now let's talk about market cap and where equity mutual funds invest their money. Market cap is nothing but size of the company and it is calculated by multiplying share price and total number of shares of the company. Here you can see the example of Moschip company. Its current trading price is 273 rupees and total number of shares are 1 crore 90 lakhs 90,000 and their multiplication gives its market cap. Every equity mutual fund invests in three categories of market cap. They are large cap, mid cap, and small cap. Large cap funds. These funds invest in India's top 100 companies by market capitalization. Basically, the biggest, most established names. Think of them as the blue chip giants like Reliance, TCS, Infosys, ICICI Bank, HDFC Bank, Adani. They have strong balance sheets, stable profits, and lower volatility. Returns might not be aggressive, but they are consistent, perfect for long term, low risk investors who want stability and safety. Mid cap funds. These invest in the next 150 companies after the top 100. Companies ranked from 101 to 250 by market cap. They are like India's rising stars, businesses that are already successful but still growing fast. They can give higher returns than large caps, but also show more ups and downs. Ideal for mid-term investors like 5 to 7 years who can handle moderate risk. Small cap funds. These funds invest in companies beyond the top 250. Small, emerging businesses that could become the next TCS, Infosys someday. Because they are small, prices move faster. They can give very high returns but also fall sharply in bad markets. Perfect for long term investors like over 7 plus years who can tolerate high risk. So, in simple words, large cap means stability, low risk, low reward. Mid cap means growth potential, high risk. And small cap means very high risk and high reward. Types of debt mutual funds. Debt mutual funds are further divided based on how long they lend money, also called duration. They are liquid funds, money market funds, overnight funds, short duration funds, and many more. To summarize what we discussed in this video, mutual funds are categorized by wherever money goes and which size of companies they invest in. In the next video, we will see how to choose a right growth and dividend mutual funds.